I'm gonna stop sharing for a moment. I think as we have a couple of people signing on this afternoon, we're just gonna wait another minute or so before we get started here. And thank you again in the meantime for joining us this afternoon.
Thanks, everyone.
I'll do. Okay, so we have an action-packed hour for you during your lunch break today. So I want to make sure we cover everything that we have planned. So we'll get started here. So good afternoon, and thank you for joining us today during your lunch hour. I'm thrilled to be here with Hayden Kopser, President and co-founder of Northern Improvement, a boutique risk advisory and insurance brokerage firm. For those who joined us for our talk on NFTs and the art market, welcome back. Today, however, we are here to talk about fine art insurance, a topic that every art collector and their advisors need to know about, whether it is for insuring NFTs or fine art, classic cars, whiskey, wine, or jewelry. Proper fine art insurance ensures your client's cherished artwork and collectibles are protected every time a hurricane rolls in, the bathroom pipe bursts, or Steve Wynn puts his elbow through the Picasso. Inevitably, when you saw the invitation for today's talk, the now infamous story of Wynn putting his elbow through the painting likely popped into your head. For those who don't know the story, I'll do a brief summary of the story of Steve Wynn's first damaged Picasso saga. And yes, there is a second one that was also damaged from his collection. So in 2001, Steve Wynn acquired Picasso's 1932 portrait of his mistress in a private sale from an anonymous collector who had purchased it at auction in 1997 for about $48 million. In 2006, Steve Cohen agrees to buy the painting from Steve Wynn for $139 million. But the deal was canceled after Steve Wynn accidentally put his elbow through the painting, leaving a silver dollar-sized hole in the canvas. After restoration, which cost about $90,000, where surgical needles were actually used to rethread the split threads of the canvas back together, and with the insurance payout for a loss in value of approximately $40 million, Steve Wynn actually ultimately later sold it for about $155 million to Steve Cohen in 2013. While this story of actually a painting becoming so infamous for the damage, it actually becomes more valuable years later is unusual. It's the famous story of the elbow through the Picasso. So before we kind of get going here, and I turn it over to Hayden to kind of start us off and talk about different types of insurance policies and kind of the nitty gritty of fine art insurance, I have a couple housekeeping items that I want to review. All participants will be on mute during the talk. Please type any and all questions into the chat box and we will answer them at the end. I will be sharing our contact information, so you may contact us directly after today with any additional questions that come up, and also a recording of the presentation will be made available upon request. Now, Hayden, over to you.
Thank you so much, Alana. And yes, La Rêve is an amazing story because it encompasses perfectly the craziness of art insurance and the art world. It's a perfect example of provenance in a very odd way, and that it's not just who was owning the piece, but also who damaged the piece and had it repaired. So had it not been Steve Wynn, probably would have been worth a lot less afterwards, and Stephen Cohen likely wouldn't have had interest in it, at least in my opinion. But it's important to note, this is an art insurance 101 talk. We're not going to delve too deep into some of the intricacies of coverage and policy types, but the plan is for you to walk away from this with a better understanding of fine art insurance so that you can speak intelligently and cogently to your clients, to your friends, and also if you are a collector yourself or someone passionate about art beyond the clients you serve, you'll be able to benefit from this, in my opinion. So let's get started with you've got home insurance, you've got renter's insurance, you've got condo or co-op insurance. That's great. That's going to cover your unit and your property. But where does art fit in or not fit into that mixture? The answer is many policies will have coverage built in for art, or in the sense that they won't necessarily exclude fine art, be that paintings or sculptures. Whereas many policies, when you think of valuables, will have a sub limit, regardless of how much you have in personal property coverage, for things like jewelry. They'll say for jewelry theft, we're only going to cover 2,500, maybe 5,000 in stolen jewelry, whereas they probably won't say that for art. So generally, yes, you may have some coverage for art. If you don't have a big collection, if you've got a couple works, having your home condo renters policy may well be enough. It may well be, and that's something to discuss with a broker. But what if you start to say, hey, I've got this $10,000 piece, $50,000 piece, $1 million piece. There's generally, unless you have a loan out on the piece or taken against the piece, there's not going to be any obligation to insure it. So why would you? And how would you? So one of the shortcomings of a homeowner policy when it comes to your fine art and perhaps other collectibles, it comes down to the payment basis. That's what we call it in the industry. Really, the idea is how much are you going to get paid out for a piece in the event of a claim? So on a homeowner policy, it may only be at what's called an actual cash value. And if that's the case, the actual cash value of a painting could be very minimal. It's not going to take into account provenance. It's not going to take into account appraisals. It's basically going to be a carrier who doesn't understand art saying, well, we figured it would cost X amount to put another painting this size on the wall. But what if that painting's valuable? That becomes a big issue. Even a better insurance policy for your home, renter, or condos is going to only have coverage at replacement cost, which might be great if it's your couch that gets damaged, if it's your carpet that gets damaged, if it's your bed that gets damaged, your clothing. But that's not so great if it's your art that gets damaged, because your art may have a value that is irreplaceable, perhaps, or as an appraised value to justify provenance or something about the piece that makes it more valuable than what the market would normally treat it to be. So next question becomes, okay, well, if that's the scenario, what do we do with the art that is not adequately covered on our homeowner policy? Well, you have a couple of options, and it really will depend on your carrier. And this also applies to commercial art. Some commercial property policies will say, hey, the art you have in your office space is covered up to X amount. Oftentimes they will have limits, unlike a homeowner policy, or sublimits rather. And then from there, you can then add commercial art coverage, which essentially functions the same as personal art. As long as you're not an art gallery, then it gets a little different. So let's say you do have those pieces, you want to insure them perfectly, you have them either appraised, recently purchased, or some valuation documentation, which any collector should have somewhere handy. You have two options. One is you can place it on its own policy. The names you'll hear for those policies will be things like personal articles floater. You'll hear words like personal inland marine, personal articles policy. There are a number of terms in the industry that have developed over the last 100, 200, 300 years, but that's generally what we're talking about. Your floaters, personal articles, inland marine policy, personal inland marine. That's what we're talking about. And then you also have the option of endorsing coverage on potentially. So some folks in the industry, you only really use the term rider when you're talking about life insurance, but many people will use the term rider. I added a rider to my policy to cover my art, to cover my collectibles. Usually we use the term endorsement, but same concept there. So that's also an option depending on the carrier with whom you are working. Now, there are pros and cons to that. So adding coverage via a rider may give you the coverage that you need. You may not have a need for a massive amount of coverage. Maybe you don't have your art collection stored in many different areas, and there's not much unique about the collection. You just have a few paintings, for example. That can be an easy option, but what becomes an issue potentially is, let's say you have losses on the home unrelated to your art. You can end up having that policy non-renewed or canceled, and you end up losing coverage for your art as well. And vice versa, God forbid, art gets damaged in transit. If you have that included on your homeowner policy via endorsement, they may end up canceling the home policy because of the art related losses. So there is a benefit to separating when you can, but you don't always have to. And sometimes you're probably going to be safe adding via endorsement. Now, the question then becomes, all right, if you are going to have a separate policy, let's say you go that route, what is the best way to structure that? The answer is really going to depend on how valuable your art is. If perhaps you have art where pieces are no more valuable than $50,000, even if you have maybe 500,000 in a total collection, and you don't feel the need to inventory your items constantly, to have them appraised rather frequently, you can insure it on what's called a blanket basis. And basically the concept there is you will have a maximum total amount for all of your collection. And then you will have a sublimit that says, we will not pay out more than X amount for any single item. And if you know your items are on the lower value side, that can be safe because then you don't worry so much about an item inflating due to an artist's market increasing during the policy term or during when you last assess the value. But let's say you have a large collection, or let's say you are inventorying your items, or they've recently been appraised. Let's say maybe you inherited items from a relative after their estate was settled. And someone like Alana was able to appraise the items. You have exact valuation documentation. The easiest way to go about that, and actually the cheaper way, is to schedule each of the items. So you have your own separate art policy, collections policy. Each item will be listed. Each item will be listed and have an agreed value. And each item, depending on the carrier, may even have coverage built in for market appreciation. So essentially, let's say this year your painting's worth $100,000, but then the artist who made it died, their market suddenly shoots up. That piece has gone up by 50%, 20%, whatever it may be, and then you have damage happen to it. Instead of being stuck at that $100,000 agreed value, you're actually going to potentially have coverage up to $150,000 to replace the painting or to settle on the amount with the carrier. So not every carrier is going to offer that, but some of the ones insuring the larger collections absolutely are. And it's a really advantageous reason to schedule your items, because when you insure on a blanket, you're not going to get anything above that single item limit. So it's something to be very cognizant of. Now, one of the beauties is you're not obligated to go one way or the other. You can have half your collection scheduled, and then you can have half your collection, a quarter of your collection, a few items on the blanket. So it's very much coverage that can be made suitable to whatever collection. You're not obligated to insure one way or the other if you have your items valued well and documented well. And so I would argue it's best to have a solid inventory, to have either appraisals handy from the last 3 to 5 years, depending on whether it's modern or older art, and to have the option at least to schedule those items. So that's, again, very flexible coverage. Basically any carrier I can think of that is going to offer fine art or collections coverage in general is going to offer blanket or scheduled. Sometimes, this is also worth noting, it's not so common with art, but rather with jewelry. You can even have in-vault coverage. So if you store stuff at a bank vault, which you could with art, or some type of well-secured facility, you really should have climate control if it's going to be art related, among other things. But you can potentially get a discount on your coverage there. So that could be a whole different topic to go through risk management and how to save money on your coverage. But this is more going to be about how coverage can be structured. So then another question is, well, what's the best type of coverage for my collection? I've got some items that are on the lower value side. I've got some items that have been appraised for very high amounts. I've got some items that are somewhere in between. I've got some items I don't even know the value of. Well, you really want to make sure you know the value, but you can get coverage even if you're not positive of the value. You can set up just blanket coverage and say, I'd rather have something in place than nothing, and hopefully a loss doesn't exceed this number I put in. It's better than nothing, but it's not ideal. It's also harder to maintain. So it's what makes most sense for your schedule and for your collection. And the easiest way to do it is talk to a broker. I talk to clients all the time. I understand the nuances of their collections. I understand what they care about. Some people say, hey, there's only a few really large pieces I care about insuring, and the rest I could care less about. So some of those folks we persuade to at least put the lower value items insured via blanket. And then the higher value items, they're appraised, they're consistently tracked, and we insure those at an agreed value with market appreciation. And another question is, so, okay, this is at my home, this art's at my home, but what if I have some items in storage? What if I have some items that are going to be in transit? What if I put some items on loan? I want to loan them to a show. Most art policies that we're dealing with are going to allow for multiple storage locations. They have to be maintained. We in the carrier would have to know where items are. And they're also going to cover items in transit, which is great. And typically we're talking global transit, although given costs and COVID, most people aren't shipping art globally right now, but that does not mean that they don't or will not get back to doing so. So that's really important to note. Now with commercial art insurance, oftentimes you have limits on transit. So if you have a corporate collection, it's probably going to say, hey, you might have $500,000 or $1 million in total art coverage, but in transit, you've only got 20, 25% of that total amount that's going to be covered. It's a way of incentivizing you to not ship all your art at once to somewhere. It doesn't mean there aren't ways around that. Doesn't mean you can't get coverage during the shipment, but generally it's going to have that built in on a commercial policy, where it very rarely will on a personal policy. It may list a transit limit, but it's often going to match the total limit of coverage. So that's worth noting. So yeah, there are many ways to skin the cat here. Alana and I will go through, I'm sure you have questions, Alana, that we'll go through, that will delve deeper into this, but hopefully that sets the table very nicely and gives you an idea of why you would insure your art rather than just assuming your home renter's condo policy is covering it, how you can potentially do that, and which ways you might want to structure going about that given your collection and your personal lifestyle.
Great, thank you, Hayden. And I think a nice kind of segue into our next topic for this afternoon's presentation is the appraisal process, and in the event of damage loss, what is that damage loss appraisal process? So I'm gonna share my screen here. And so we'll go on to talk a little bit about the different purposes that we can have for an appraisal. And there really are a wide variety, as you see here up on the screen, wide variety of reasons that appraisals are conducted. One of the main reasons being is to establish and maintain an appraisal on a collection to really avoid underinsurance and to ensure artwork is properly valued prior to a damage or loss. When selecting or recommending an appraiser to work with your clients, here are a couple pro tips. All appraisers and appraisers should comply with the Uniform Standards of Professional Appraisal Practice, or USPAP. You may be familiar with this term, as it is the same standards that business valuers and real estate appraisers adhere to. Make sure that any appraiser that you are a client engage charge an hourly rate or a flat fee and not a percentage of the appraised value. The appraiser should also have the appropriate education and experience in the type of item being valued. In my experience, be wary of a single appraiser who says they can value it all: fine art, furniture, carpets, and jewelry. But an appraisal firm with specialist appraisers that have the experience in the appropriate collecting categories that exist within a collection can be well suited to handle an appraisal of a collection of different items across different price points and different collecting categories. My recommendation, even though I am an ex-auction houser, the appraiser should really never be an auction house, dealer, or gallery that sold the client the work. It is crucial to have an independent and unbiased appraiser perform the valuation. I don't have enough time during this talk to get into all of the court cases, all of the stories from clients about the legal and ethical problems that have come up, and the lack of due diligence we've seen, and the lack of research performed when an independent appraiser isn't engaged. So as we talked about the difference between the different types of appraisals, there are many different types of values that you may see, the two main values being fair market value and retail replacement value, or also retail value. The purpose of the appraisal dictates the type of value for an appraisal. Retail values, or retail replacement values, should only be used for insurance appraisals. Fair market value i.e. the auction price is the price that the property will sell for on the open market. It's between a willing buyer and a willing seller, neither being required to sell and both having reasonable knowledge of all relevant facts. Where on the other hand, that retail value is essentially a gallery or a dealer price. A quick side note, I do have a client right now who, whereas I've said retail values, retail replacement is used for insurance purposes, I have one client right now who's a collector of very contemporary African-American artists whose market, especially at auction, are extremely hot right now. Work by these artists sell for higher than the retail markets and often 4 to 5 times auction estimates. In these select instances where auction prices are higher than retail prices, we've actually used an auction replacement value instead of a retail replacement value for insurance appraisals. Also, due to the limitations of supply through the retail market, the works are primarily available at auction. So in the event of a loss or damage, the client would likely have to go to the auction market rather than the retail market. And any purchase they would need the money to purchase that work at auction. So looking to that highest market is really crucial for artists whose auction markets are so hot right now. So kind of understanding the purpose of the appraisal, it's for insurance to make sure that clients are appropriately protected in the event of a damage or loss. And sometimes that might be looking to the auction market. In addition, to identifying the purpose of the appraisal and the type of value to be used, the approach to valuation must also be selected. The most common approach that we take in doing insurance appraisals is the sales comparison approach. This is used about 80 to 90% of the time in art appraisals. It's an approach that concludes the opinion of value where we're comparing the subject work to comparables or similar property that is currently available for sale in the appropriate marketplace and making adjustments to prices based off of marketplace conditions and the property's characteristics and differences between the subject work and the comparable work. Sometimes in insurance appraisals, we also may use the cost approach, which looks at the cost to recreate an item, such as the cost to refabricate a sculpture or to repaint a mural. But this approach should only be used in select instances with a kind of a careful understanding of what the item is and whether that approach to valuation makes sense. It's also important to note that an appraisal, especially for when you're submitting it to an insurance company, that an appraisal should never be used for an unstated purpose. An insurance appraisal shouldn't be used for estate tax purposes, divorce proceedings, and an estate appraisal shouldn't be used for insurance purposes. So understanding the purpose of the appraisal, the type of value selected, really gives you that understanding of, can I use this appraisal to submit to the insurance company to have the work properly protected and insured. So as just a quick note to understand and talk about a little bit between the fair market value versus retail value, as we talked about, in most instances, fair market value or auction value is a lower price point and a lower market than retail value. So this Andy Warhol print of Mick Jagger, edition of 250, fair market value is about $65,000, whereas the retail value for this piece is closer to $100,000. So that retail value would be the insurance value and might be ultimately a scheduled value if your client decides to go that route for their insurance policy. And also another note, the question always comes up, how often should items be reappraised? And that really depends on the price point of an item and the volatility of that, the market for that work and the market for that artist. Some pieces, like the prior example where I mentioned the very hot contemporary African American artists, we're actually revaluing those pieces every 3 to 6 months at this point, depending on when they're coming up for auction, whereas some other works you may only need to reappraise every 2 to 3 years or even 5 years in some categories that are less volatile and a little more stable. Appraisers can make these recommendations to you and your clients based off of the type of items in the collection. And before briefly going on to damage loss appraisals, I wanted to make a final comment about the type of information clients should keep in their files and in their records, and if possible, copies in multiple locations. Purchase receipts, prior appraisals, inventory, provenance, and related documentation are crucial during the appraisal process, but are also crucial to have in a file in the event of a damage or loss. During that claims process, it's helpful to have that information to provide proof of an item's existence in the collection, its condition, any components that may affect value just prior to the loss. And also what we like to do for clients as well, in addition to having items appraised, is there are a lot of items in a client's residence, personal property, that might not be appraised. So also having photographs of all of the rooms in the residence, opening up doors, drawers, cabinets, making sure you at least have that photographic proof of everything in a residence, all the way down to pots and pans in the kitchen, all the way up to your $10 million Monet painting hanging above the fireplace. And just one last kind of note before I go back to Hayden and we have a little kind of Q&A back and forth. I just wanted to speak a little bit about damage loss appraisals. During my tenure as an art appraiser, I've completed over 150 damage loss assignments for fine and decorative art. No two assignments are alike, and each comes with its own set of factors. When we look at a damage loss assignment, we, however, typically follow the same process. We look at the pre-damage replacement value of an item. Either if there is a schedule or agreed upon value, we'll use that in our analysis, but sometimes if the item isn't scheduled or we're asked by the client or by the insurance company to determine what that exact pre-damage replacement value is as a starting point for our analysis. Next, we move on and we assess the type and the extent of the damage. And based on that, on the type of object and perhaps the type of damage, we then identify the appropriate restorer or conservator to prepare a formal condition report, restoration plan, and treatment costs. Sometimes a client may actually have a preferred restorer that they want engaged for this project. Once we have that treatment proposal, I then go back and speak with the restorer about their views of the anticipated success of restoration. Sometimes restoration can only go so far. It's not going to make the work perfect again. You might get the work back to 90%, 80%, sometimes 50% of where the work was prior to that damage. And it's having an understanding of the extent of the conservation or restoration, the anticipated success of that restoration, and also an understanding of what is the market when we're looking at potential loss in value. What does the market and what are collectors willing to accept? For some famous photographers, the smallest crease in the photograph will result in an extraordinarily high loss in value, whereas damage to an old master painting, where due to its age and the fact that collectors expect there to be condition issues prior damage restoration, any type of current damage might result in a lower loss in value. And then also other factors to consider is, where is the damage? Is it a gash across the face of a portrait, or is it on the top left corner of a work of art? Just to kind of illustrate the process and that calculation that we go through, I have here up on the screen kind of a sample. We looked at this Monet painting, pre-damage value, $10 million, cost of restoration, where there is this large tear in the canvas. So you're not only looking at repairing the canvas support, but then also fixing and kind of putting back together the paint surface and possible in painting, $50,000. Anticipated loss in value following restoration, with this somewhere around 30%. I mean, there's so many factors, and it's an interplay with all of these different factors looking at the provenance, the history, the importance of the piece. The more important the piece, likely or perhaps a lower loss in value because the importance of the piece outweighs the extent of the damage. A less important piece with damage, likely a higher loss in value. And it's all of these factors that kind of indicate or kind of bookend you into the loss in value. And then once we see that anticipated loss in value, 30% or 3 million, total recommended compensation for this damage would be $3,050,000. And so now kind of we're going to turn it back over to Hayden, and I have a couple questions for him. As I'm not an insurance professional, I thought it would be very helpful for me to ask him some of my questions that often come up in my work with clients. So the first one, back to Hayden, for scheduled items, what do insurance companies require to add a work to a schedule? Do they need an appraisal, a photograph, a purchase receipt? And on the other side, even though I touch upon it a little bit, what should clients keep in their records?
Yeah, I think what you recommended before that clients keep in their records is actually often beyond what a carrier will require. But I would also recommend everything that you mentioned. What a carrier is really going to require, depending on the value, let's say it's a piece under 250,000 or under 100,000 agreed value, chances are they're not going to require an appraisal, meaning a formal appraisal. They're going to need some form of an idea, and as will you, of what the agreed value is going to be if you're going to schedule the piece, because they're not going to just throw that out to you. That's out of their interest to do so. So what you're going to need is an agreed value. You're going to need the artist name. You're going to need the year of painting, or roughly if determinable. You're going to need the dimensions, the medium. These are the basic things you're going to want in your inventory. Pieces that get above 100 or 250,000, you're going to need an appraisal. Now, the difference between needing and should have are very different. So you really should have your pieces appraised, maybe not really small items, and especially if you're not taking them too seriously. But if you're intending on collecting, even if it's a small collection, you're going to want bills of sale on file, like Alana recommended. You're going to want to get pieces appraised. And what Alana said is so important about knowing when to appraise items. The general rule of thumb with fine art is to have an appraisal done every 5 years, roughly. Now, that's the average. So an old master, that might be easy if you have one of those, because only so many go to sale. Very rare that an orphan piece is discovered until you have a Leonardo that's suddenly discovered, or at least what we assume is a Leonardo, and then that can shift things. But in general, those are pretty stable markets. So if it's a stable market, if the artist is long dead, if most of their pieces are known, it doesn't mean things can't change, but probably every 5 years is a safe estimate. But again, work with experts at all times. If it's a contemporary artist, if, like Alana said, it's an African-American artist or an artist that for some reason is in a market that is very hot, it is so important to frequently appraise. Alana mentioned 3 to 6 months. That's not uncommon when auctions are happening every week, potentially, or every month. The market is totally shifting. Buyer interest goes crazy. And you look at NFTs, for example. If you were someone appraising these, you would have shifted so dramatically in the last 12 or so months that your head would be spinning. You could be appraising these things every week or two, and you could be coming up with different numbers from an honest appraiser. So the answer is knowing what you have in your collection will be able to help you determine how often you're appraising it. The carrier may require an appraisal that's within the past 5 years for pieces that are 250K and more. That's usually the number I see, 100K for other carriers. But again, that does not mean that it's not wise for you to do so, even on lower value pieces that the carrier does not necessarily require that for.
Mm-hmm. And then just to kind of, as a follow-up question, that's kind of on the front end with scheduling the items. What about, and this kind of leads me into my next question, like what about during that claims process? So I'm going to jump into my next question, and then we can kind of circle back to what happens during the claims process with the need for an appraisal. But now that we kind of have an understanding, as you went over policy types and structures, let's talk about risk management in the claims process. In the event of a damage or loss to an insured work of art, what's covered? How is it covered? who pays the claim, and how does that claim get handled?
Yeah, very important to understand this. So it's going to depend on how your coverage is structured and if the item is replaceable. So if it's a total loss on an irreplaceable item, a one of one, you're probably going to work with the carrier. They're going to you're going to file the claim. This is the exact process. You will file a claim. You will document the damage to the extent that you can. You will do everything in your power to avoid additional damage. So if you've got a painting under a leaking pipe, you're going to have to move that paint. You have to do what you can within reason to protect it. If your house is burning down, different story. You need to get out of there and save yourself. But within reason, you're going to have to protect the item from future damage. So that's step one. You file the claim. They assign an adjuster. The adjuster is going to likely, if they're a fine art adjuster, they're going to have an idea of how things are valued. So it's not going to be an ugly scenario really, because they know what they're looking for. They know if a piece is a total loss pretty quickly. They have disinterested third parties, be they appraisers, restoration experts, et cetera, who they can discuss the piece with and say, hey, is this fixable? Should we just immediately move towards replacing it or paying the insured for a cash settlement amount, which is usually just the agreed value listed, if not with additional market appreciation. And then if there's restoration going on, the carrier is going to typically be paying the restorer directly. The insured is going to get paid out if there's just a total loss. That's a simple one. You cut the check, and that's basically how that works. And then they keep whatever's left of the piece as salvage, as we call it in the industry. Now, the question that usually arises is, well, what if you take a piece as salvage and you find out it can be restored? There are laws in some countries that say that a carrier cannot make a profit on restoring something, be it a car, home, et cetera, that they take as salvage. And even when there aren't laws on it, just carriers are really not doing that and typically can't. If they're taking something as salvage, it's to maybe get a few bucks out of it. It's just more or less, hey, we paid out the claim. Now we own the remaining pieces. So that's really usually the claims process. The goal is always to make the insured whole. So as you showed the example with the Monet, making someone whole is two-parted. One is trying to restore the piece when it's restorable. The other side of that is because it's a piece that's been restored and therefore has lost value in the sense of being a more pure piece, typically it's not usually the Picasso Steve Wynn scenario, you're going to have to make up for that diminution of value because that piece, as well as it could be restored even perfectly, it's known to have been damaged, known to have been restored. Someone else's hands have touched it aside from the original painter or sculptor, whoever it may be. And so you're going to have that amount where you say, hey, this was 10 million. Someone like Alana can appraise that and work with a claims adjuster on that, work with the carrier. And then she'll say, look, you restored it perfectly to the extent you could, but this piece is no longer worth 10 million. It's worth roughly 7 million now, given the market for previously damaged and restored pieces. And that's really the process. And most of the carriers who insure fine art have people on staff who are passionate about art. They're not people trying to nickel and dime. They accept premium and they care about fixing art when they can, replacing art when they can, paying a fair amount out, an agreed amount out when they have to, and it's a total loss. So it doesn't mean there aren't contentious scenarios, doesn't mean that you don't have commercial claims where there may be multiple owners or investors in a piece, and that can get all funky. But in general, it's usually handled by art professionals. And again, this is why it's so important to insure your art when you really care about your collection, because the last thing you want is a good homeowner insurance carrier with no art experience to agree to insure your art and then have a claim scenario that they really don't know how to handle so well because they're not used to a collection like yours. So it's a very avoidable situation, but worth noting there when we talk about claims. You want the best coverage, best claims handling, and things will be most fair that way.
Mm-hmm. So Hayden, in your experience, what is the most common damage for art and also as a separate note for jewelry as well?
Okay, two different answers. So for art, the things, transit is a frequent cause of damage. Definitely water is a big cause of damage. More so, even smoke probably more so than fire. We all think of fire because it's always the biggest loss, or almost always when it happens, we think of that as the most common loss. Thank God it's not. It's actually very rare that a home burns. but very frequent depending on where that home is, that a pipe will burst and cause damage, that a water heater will burst, that steam will get out of a furnace, for example, any number of things that can happen related to water. Or let's say you have a fire in one room in the house, smoke damage, or even from a fireplace, this can happen. Smoke damage can get out, can damage paintings without a fire damaging the home. So that can happen, but really talking transit and water are the most frequent I've seen in my experience, and really leaning towards water as being more common. And then for, yeah, go on.
Oh, I was going to say, and also an important little thing to note is not all fires are created equal, and not all work, when it is exposed to those different elements, water or fire, are created equal as well. I mean, I've come across instances where there are some fires where the smoke and soot is just more of a fine particulate and can be easily kind of remediated in the home with a conservator, kind of with a little HEPA and a light brush, and kind of clean off that soot and smoke. But then I've also had other instances where that's, instead of it being a dry particulate, it's actually wet and moist and sticky. And that remediation process is a whole other kind of level from the restoration standpoint. And then also let's talk about water. I mean, there are some objects that if they get wet, it's just drying them off and that there's no real damage, versus other objects such as works on paper that can deteriorate, mold can grow. And so it's not just, it's that type of damage, but then it's also, or what it's exposed to, what caused the damage, but then it's also the object itself. So that's then complicating all of this too.
Yeah, but those are great points. And like, you think of a fire caused in your kitchen is going to be very different from smoke damage from a wildfire. And I've had to deal with those, unfortunately, in California in particular. So these are fundamentally different. Like Alana said, the climate of the area where this is occurring can have an impact. What the cause of the fire is will certainly have an impact. Also, what the pieces are. You know, if you've got sculptures, they may be fine from smoke, and that's great. But if you've got a painting, that could be a very different story, and particularly depending on how old it is, what the type of medium it is that the paint is on, what type of paint is being used, etc. So that's important. And then the next question is about jewelry. Jewelry, the losses we see are ones, thankfully, that are in the news for art, but rarely happen. Theft and what we call mysterious disappearance. Mysterious disappearance is a very funny name, but the basic idea is the thing's lost. You've got no proof of theft. There's nothing to file a police report on. Maybe you left it in the hotel room. Maybe someone took it when you were on vacation. It's hard to tell, but you're going to chalk it up to it's not where you thought it was. And that's mysterious disappearance loss. So theft obviously often happens with jewelry. When people break into a home, they'll take that. Most thieves are not art sophisticates. Even if they walked into a museum, they wouldn't know what on earth to take from the wall. They'd probably pick something at random and it might have very little value. It's not usually the Gardner Museum, where they're probably at inside intel and seem to know what to take and took some extremely valuable pieces. Thankfully, it's not usually that. There is very little black market for art. It's oftentimes art is stolen and then used as a negotiating tool. You're not going to steal a $50 million painting and sell it to a Saudi sheikh because they want to show it off. You know, the people who have the money to buy this stuff want to show it, and they don't want to have international police at their doorstep over a piece of art. So it's, it doesn't mean things don't get stolen, but jewelry definitely gets stolen off. And you break into a home, you see watches, you see ladies' earrings, bracelets, etc. That's what you're going to snag, whether it's gold or looks like it's gold. That's the thing that's going to catch your eye. So that's common, but a lot of the times we had a claim when I was at AIG, and a lady had a $25,000 brooch, and I don't know why, but she decided to put it on her swimsuit, and she went out for a swim. Well, the brooch is somewhere in whatever ocean that ultimately occurred in, and that's chalked up to a mysterious disappearance. It wasn't an intentional loss. She didn't get mad and throw it into the water. It fell off, we guess. And then, with mysterious disappearance, you get paid out or the piece gets replaced, with the caveat that if it's discovered, you're going to have to return it or give that item up as salvage, which wouldn't be so much salvage at that point. It would basically be the full value. So that's worth noting. So mysterious disappearance, you don't assume it'll never turn up, but you pay it out as if it will.
Mhm. Yeah, and then also just a kind of a quick follow-up note slash question there. I mean, because of the likelihood of mysterious disappearance, isn't the premium for jewelry significantly higher for the premium for fine art that just hanging on your wall and likely just going to stay there?
It is substantially higher. It is art, you're probably looking at 20 cents for every $100 in coverage. Jewelry, you're looking at maybe 1% of the value to 2% of the value potentially, for scheduled jewelry going towards insurance every year. So you can just see already they're 5 times to 10 times as much. And then when you get into blanket, and then also you get into different areas. So like insuring jewelry in upstate New York with some carriers is a lot cheaper than insuring it in New York City. So there's all these different factors, but always in every experience I've ever had, art's going to be cheaper to insure than jewelry unless you've got like some crazy claims history with your art and you've never had a jewelry claim. Very unlikely.
Right. And speaking of art claims, you and I had a fun conversation last night when we were talking about this claim story for a painting that I was the appraiser on. As I started to tell the story, you actually had heard about the story because it was that infamous at this point. So I'll share with the attendees a couple pieces about some of the kind of the fact pattern, just showing about how complicated and how different each claims process is, and also, unfortunately, how avoidable a lot of the damage is. So a Frank Sella painting, for those of you who don't know Frank Sella painting, he's kind of a post-war 60s, 70s, 80s, 90s through to today artist that works kind of in color field, in the minimalist space, where he does almost these multicolored concentric circles on canvases. You would likely recognize a work by his if you saw it. So the situation is as follows. A Frank Sella painting goes up for auction at Sotheby's and fails to sell. And this is an interesting kind of twist in the whole situation. The owner then decides to consign it to a gallery in Chelsea to try to sell it after it doesn't sell at Sotheby's. The gallery then partners with another gallery to put together an exhibition of the artist's pieces, and the painting is moved from gallery A to gallery B. Due to the large size of the painting, it can't fit in the elevator, but it can fit on top of the elevator. So the elevator is lowered, the painting is moved onto the top of the elevator with 2 art handlers. And somehow, instead of going down, the elevator goes up. And actually, because the gallery was on the top floor, the painting gets crushed by the top of the elevator shaft. Luckily, the art handlers walk away uninjured, but the painting is in a giant pile. So it's actually carried down the stairs. And I saw photographs of the canvas kind of curled up in a ball, with one person walking down with the canvas and the other person walking down with the splinters of the wood stretcher. It's then brought to the restorers to fix. The challenge with this particular type of painting is that it's meant to be unframed when it's displayed. And also the color is, there's flat planes and flat sections of these concentric squares, so that there is no modulation of color. It is not an impressionist painting where any type of damage or restoration could be hidden within the brushstrokes. It is they're flat planes of color. So a couple of interesting things came up when we were looking to do the valuation. We were first asked to determine what the pre-damage retail replacement value was for this painting. So right before the damage occurred, what was the value of the painting? As I mentioned at the beginning of this story, the painting had actually failed to sell at auction a few months prior. And typically when we look at paintings that have failed to sell at auction, that public buy-in has a negative impact on the work's value. So we have that negative impact on value. So we have to account for that buy-in in our pre-damage replacement value. And then also, we're looking at the works. It was a well-known work. It had its place within his art history. It was a work of quality by the artist. But then we had this extensive restoration when you put a black light on the painting. When you look at, just as a side note, so when looking at potential or restoration of a work of art, you'll go into a dark room, turn off all of the lights, and actually use a black light. And in instances where there is fresh paint on a work, you can actually see that paint fluoresces as a different color. So you can begin to identify where the in painting is. And in this instance, when you turn off the lights and turn on the black light, the painting lit up. It was covered in painting. So looking at that, the impact of that extent of in painting on the work's value and on the loss in value was quite significant in this instance. And also both in painting and then also the need to repair and restitch the canvas was quite significant too. So all of those factors are coming into play, the impact of the buy-in on the pre-damage replacement value, but then also the extent of damage and restoration required to repair this painting. So that's kind of really the moral of the story, is never put a painting on top of an elevator, but especially as Hayden mentioned, most damage to artwork does happen in transit. And just to kind of wrap up, because I want to make sure that we do have some time for questions here. Just a couple, I guess one last question here is, I think you mentioned a little bit talking about replacement cost versus actual cash value, and some recommendations you might have for clients when looking at it from an insurance policy standpoint. I know from an appraisal standpoint it's different, but when clients come across this in policies, do you have a preference, recommendations, especially for insuring art and collectibles? And then I think as a second question, looking at, I think you did mention it a little bit, blanket, when should clients look at using a blanket versus schedule? Because I also often recommend to clients figuring out what their single item limit is for a blanket, and then doing an appraisal for any items at or above single item limits on a blanket.
Yeah, so the very easy answer on what valuation you should opt for is any time that you can get agreed value, schedule items, and also include market appreciation coverage if the carrier is willing to offer that, it's going to be worth it. It's going to often cost less than blanket because the carrier is more aware of what the individual pieces are and the exact spread of risk. So anytime you can get that, you can always talk with your broker or ask me if that's available with your carrier, because I should know that very easily. Always go for that whenever you can. Now, as Alana alluded to, and as I brought up before, when it comes time to deciding whether to schedule or blanket, sometimes you have lower value pieces. I have a client who's got a $3+ million collection. We know all of his more valuable pieces, but it's a very large collection. So there's a lot of smaller pieces, not small to someone who doesn't collect, but in comparison to the total sum. And what we've done with his is those larger value pieces, really anything above 50,000 or in that 50K range, we've opted to schedule. He's an art expert, so some of it's appraised, some of it he has a good idea for the agreed value, and the carrier is pretty understanding that he's acting fairly when calculating these, and they're still requiring appraisals for anything over 250K. In that case, he's got a collection of art books as well, and we can insure books, whether they're signed specialized books or just more valuable books that are not normal contents of a home, not your normal novel on the wall, or on the bookshelf rather. So in his case, we've got a lot of his items on a blanket. We have a single item limit that we've decided on. Anything that's within too close of range to that single item limit, we opt to schedule. And the reason for that is, let's say something's under 50,000, that's the single item limit this year, but something happens with that artist's market and that piece is now worth 60,000. You're going to have no coverage for market appreciation in the event of a claim if you don't reassess that value and opt to schedule it. So usually, blanket's a great option. It makes life easier in general, but it's also important to note many policies, particularly commercial art policies or art gallery policies, they're going to say, hey, here's your amount of coverage. You're going to have to handle the inventory on your end. In the event of a loss, you're going to have to provide information here. So just because the carrier doesn't ask for it, as we both said before, it's important to understand what you should have as a responsible collector, what your client should have, what you should recommend for them.
Great. Thank you for answering that question. I think that always comes up of, do I appraise? Do I not appraise? Do I schedule? Do I not schedule? And it's an ongoing conversation. I think there's no one right answer, and we're going to continue to speak with that about our clients till the end of time. But it's great to have that information. And we have our first question come in. And again, any other questions that you might have, please feel free to answer them in enter them in the Q&A or chat box. So we have a question from Mary Webble. I'm an art lawyer and often recommend either Lloyd's or Chubb as fine art carriers. Lloyd's has a better reputation, but tends to be difficult for paying out. Chubb is better at paying out and working with. What is your experience with both carriers, and who do you prefer working with?
All right, so that's a good question. I do business with a lot of carriers, and so I won't bash any, but I can tell you well, maybe there's some I bash, I just won't do it here. But yeah, in general, Lloyd's, to understand it, Lloyd's is merely a marketplace, basically a vessel through which carriers can pool capital together and offer coverage. Chubb itself is its own carrier offering coverage directly. One of the major differences is typically if you're getting coverage through Chubb, it is what we call admitted coverage. It is filed with the state has approved rates, they are regulated by the state. Generally, when you're buying Lloyd's coverage, it is what's called non-admitted or excess and surplus coverage. Does not mean the coverage is bad, but it means it's typically less regulated, almost always. It means you may have multiple carriers on the tail end paying out a claim, hence your point about that potentially being difficult to pay out. And oftentimes with excess and surplus coverage, because it's not as regulated, there are certain coverages in there that are consumer considerate, if you will, that are not going to be included. So it's anytime you can get admitted coverage and it's with a solid, well-rated carrier, you're best off to go that route. Those are two carriers. So other ones that are solid carriers are Markel. Markel is a very big company. They have a big art division. They do commercial and personal art collections. They insure galleries, museums, etc. So they're a great option. AXA, also known as AXA XL now, the French carrier, has a very large art and specie division. They're big. AIG Private Client Group. When I was there, I assume this is roughly still true, we were insuring 100 of the top 200 private art collections. Again, probably still accurate. Fantastic coverage. Internal art experts, people who've worked at auction houses for 10, 15, 20 years before coming to insurance. So you're talking more knowledge than I will ever have in art as an art underwriter and broker. Vault is another high net worth carrier, as we call them, that does art. They're newer, but they're still great. Mm-hmm. Pure is another. So I could keep going on, but that gives you an idea. There is a very large landscape of options through which to insure your art. And really, it's going to come down to where the collection is, which broker you're working with, and who they have access to. But you know, that went more in depth than your question. I'm not trying to dance around it, but oftentimes I would say if you can get Chubb's coverage versus Lloyd's, it's probably going to line up better. It may even be more advantageously priced, and it's the coverage language is probably going to be a bit broader.
Mm-hmm. No, I mean, I think that all of the insurance carriers that you listed out, and have even done appraisals for some of the kind of the lower tier insurance carriers as well, Travelers, Allstate. And I think it really comes down to also is their claims process and their understanding of the art market, the restoration process, and the value of art, especially if you are a collector, or even if you don't have, and something that I always say to advisors when I'm speaking to them, your clients might not always identify themselves as collectors, but they may have a collection because it's inherited, they've bought over time, works have appreciated in value. They might not be actively engaging in the art market, so they might not call themselves collectors per se. But when there is a collection of somewhat significant value, I think also finding a carrier that understands in the event of damage or loss, especially if it's damaged because you're dealing with a unique work of art, a client likely wants that piece back. How is that claims process being handled? Are the right appraisers brought in? Are the right restorers and conservators brought in? And all of those factors, I think, are crucial in kind of the complete insurance package.
Absolutely, Alana. And, you know, it's really, and I briefly mentioned this before, just because a carrier can insure art does not mean that they're best suited to insure art collections. And Alana clearly has dealt with the claims process with some that I have not dealt with, thankfully. And I'm sure some are well-intentioned, but don't even know which way is up when it comes to insuring art. So, it's so important to understand what suits your collection. If you've got a few small pieces of art, you're probably fine with your State Farm or Allstate adding as an endorsement. If you've got a collection, even if you don't call yourself a collector, you really should look to separate that coverage. And it's also funny to note that a lot of people will not say they're collectors and in fact be collectors, and vice versa. A lot of people have a tiny amount compared to others and will be proud collectors. So that's sort of a funny nuance that you notice within the art community.
And now that we're just at 1 o'clock, I want to be respectful of everybody's time today. So I'm just putting up my contact information, Hayden's contact information. So any other questions that come up today, tomorrow, a week from now, we can both be resources to you and your clients through this insurance process. Hopefully there's never a need to discuss with us about the claims process, hopefully, knock on wood, but it does happen, and we're both here to help you and your clients. Thank you again for joining us this afternoon. We're thrilled that you took time away from your lunch break to listen in this afternoon. And thank you again.
Thanks so much, guys. Thanks for having me on, Alana.
Yep. Bye.